Hello, this is John Piper with the weekend video clip, and it's Saturday the 16th of July. Start with gold today. It doesn't hurt to reiterate our basic aims. Big calls about catching the big moves. This year has been good with gold. At the beginning of the year it was around 1060 thereabouts. Saw a peak at around 1380. That's a good 25% gain over the course of the year. Miners has done much better than that. My basic function is to try and deliver the big moves. We got gold in, I think, 2009. We got Nikkei 2012. Solid moves in the markets, which should make you many thousands of pounds. You pay me a smallish sum per month. You can reduce that by half by going for a lifetime subscription. In exchange, I try and deliver solid gains well in excess of what you pay me. That's the basic model. And certainly in gold this year, I'm delivering pretty well, I would say. I hope you concur. I know a number of you are. As I say, I just want to reiterate the basic plan here. Essentially, we have a 5-wave advance to there, followed by an A, B, C, and now this rally here, which is looking like a 1 of 3. It hasn't really got third wave characteristics at this point. So this correction here, let's go down a little. This is the hourly chart, so we have the double top here. I've now currently got an extreme stop to buy above that level. That may be the next trade here, depends on how it goes, but we've got A, B, 1, 2, 3, 4, 5. So evidence of a peak, of a low here, in fact. A bit of a spurt up there at the moment. I'm looking to buy that if it continues. That's one potential trade for next week. See more acceleration, I'll be looking to buy gold. We're looking at silver. The market I cover as regular do gold. 5 waves are there. 1, 2. Then we've got a 1, 2. 1, 2. This could be a third of a third, pretty strong. This could be a fourth coming in. So more upside still due there. But it's possible the acceleration phase is behind us. It has been a very strong move. It was around 13.5 beginning of the year. Saw a peak around 21, so that's a good 50% up, I think. Yeah, at least that. As I said before, any pullback on gold or silver should be seen as a buying opportunity at this time. Obviously, it's best to wait for some kind of buying response to come in, but I think there's a lot left in both these markets. We may well be trading these for, well, I think most of 2017, I'd expect. Right, on to the next market. I look at the DAX in comparison to gold. Started the year around here. So basically up. Sorry, not up. Down, up, down, up, down, up. So no clear trend. Not really the stuff of big calls. The actual wave count here. Sorry, the wave count here from the peak is as an A, B, C. Correct your form. A. At this point I get a bit confused. This could all be a B, and we could be seeing this C wave rally coming in now. That's possibly the preferred count right now. Let's go and look at the shorter term here, because we have got 5 waves up at the moment. For those new to the service, 5 wave forms like this, 1, 2, 3, 4, 5, is a technique from the Elliott wave theory, and that can mean that there's a peak coming in at that point. We've also got this very sharp Brexit decline, followed by an A, B, C, which is a corrective formation, B wave, and then this 5-part C wave. This is why I'm thinking we could be seeing a peak around these levels, around 10,001. Right, there are 2 parts to any setup, as it were. First, you have some kind of peak, which may have some meaning. And we can see the clear move above the 10,000 level, which seems to become support, though, which is, of course, a positive. And we see the failure, but the failure is an ABC type formation. ABC, a bounce, and now this sideways drift. Not really much there to give any confirmation of a peak, so we have got 5 waves up, suggesting that we're going to see a peak, but so far no sign of it at all. Let's go back to the longer term. Okay, on the DAX, this is the peak of the A wave. That's all the B wave. So if this is not any importance, then the next obvious level is 10.5. So if the market can gather steam above 10.1, I would think 10.5 is a good target for where we're going to go. We had expiry on Friday, of course. Often you see quieter action to expiry. That wasn't really that particularly quiet, I wouldn't have said. But we could start to see more dramatic moves coming in this week. So right now, unless this small correction starts to develop some legs, I would think we're going to go higher over the next few weeks. Alright, looking at FTSE, we have a similar pattern. There's an ABC, and we then have another A, ABCB, down to there, and we've now got this leg here, which is about is about the same length as the A wave. So 55264 is 900 points, 5750 to 6650, which is around there, is 900 points. So the rally has done all it needs to do in terms of a simple ABC correction to see a peak at this point. Let's go down a little. Okay, so here is the Brexit low. 1, 2, 3. Nice ABC 4. 1, 2, 3. Maybe an expanding diagonal type thing. 4 wave. 5. So we have a clear 5 waves there, clearer than the DAX in fact. So let's see what's happened since that peak. Well, the action's a lot more dramatic than it was on the DAX. From there to there, it looks fairly impulsive, except that there's no clear third wave. The easiest way to establish impulsive action is to see a clear third wave. I mean, that's clearly pretty impulsive, and we have got a 1, 2, 3 count to there. But then it all gets a bit dithery beyond that point. I mean, this could be some kind of I don't know, some kind of extended fourth wave type thing with a fifth wave there, but hardly the clearest count in the world. Having said that, we have got a nice corrective A, B, C to here, so that level there is important, obviously. It's also approximately 50% level, 6740 odd, 6610, 130 points, 65 points takes us to around this level here. That's not precise, but so you have a 50% retracement. We have an impulsive move, a corrective move, and I'll be a seller come Monday if we start to see some indication of that, either by us falling away or by some kind of spike up to a 6-7, which suggests we're going to see a sell-off at that point. And that could be quite a big time. I mean, that could potentially be a big time move because of the wave pattern we've seen, the complete possible ABC rally following an ABC decline. I'll just actually look at that again. Let's repeat that, because this is actually it could potentially a major signal. A, B, C, A, B, C. Peak was around 7.1, low was around 5.5, 1600 points. So 50% is around 6.3. We're obviously way above that. Around 6.8% Fibonacci would be around here, I think. Again, precise calculations would be better. I said 50% was around there, 800 points up. So we've gone beyond the normative levels. That's fine, that happens. A pullback below the Fibonacci level, which as I say, needs to be calculated more precisely. As I say, we already have the possible reversal here with the pattern that's not ideal, but it serves if we see the sell-off on Monday. So that's two trades next week, one on FTSE and one on gold, if we see the right kind of action. Well, I'll call it a day at that point. I hope you found that interesting and useful. Back to the report on, actually the midweek report will probably be on Wednesday this week. I'm rather tied up Tuesday. I'll do one on Monday if something happens that's interesting, which of course it may well do given what I've just been talking about. Have a great weekend. Thanks for listening, and bye for now.